good morning. How do you get along with the day at a time when you're seeing what you are on the global screen and it seems like it's going to be one of those extremely painful Mondays?
Yeah, that's true. So I think there's no escaping from the global volatility. All of us know what's happening around the world. There's a great degree of uncertainty related to whatever tariff measures have been announced. And the statements which are coming in now seem to indicate that this is more a strategy and it's not a negotiation tool. And to that extent, all countries should brace for these tariffs to remain for longer. So, although on a impact basis, the actual impact on the Indian economy per se is going to be low, maybe around 0.2% impact on overall growth. But I think it's all a matter of risk averseness, how reevaluation of risk assets, etc., which is going on. So I think given what is happening to the global VIX index, many panic indicators, etc., it's highly probable that markets can possibly bottom sometime this week, given the extent, the way they have fallen. And then the recovery process in different countries will be different. In the Indian context, I think the monetary policy meeting becomes very important because these tariffs are inflationary for the US economy, but deflationary for rest of the world. Many economists seem to be advising RBI to be conservative because Fed governor has said that it will lead to higher inflation. But it's higher inflation in the US. For the rest of the world, because the supply of goods for the rest of the world actually increases vis-a-vis what the supply to the US at a higher price, it is actually going to be deflationary. So I think the Monetary Policy Committee should actually be more aggressive in cutting rates and boosting liquidity. So I think that becomes critical from the Indian market standpoint. So today, whatever fall is going to happen is a given. But what happens from here on will depend a lot on how various authorities in various countries respond.
But Sandeep, since we all follow you on the social media platforms, just going through, and you don't seem to be that nervous with the fall, and you're rather looking for some buying opportunities at this point in time and not looking to sell anymore. But give us some sense that which are the pockets that you are looking at this point in time, maybe at the dips you would like to go ahead and buy?
Even if you look at your headlines today in terms of the companies which have pre-announced, you see a company like I'm not recommending this as stocks, but I'm generally saying that the numbers coming out of a jewelry company like Kalyan, despite high gold prices, or Jubilant Foodworks, or Trent, or Nykaa, all of these things seem to indicate robust domestic demand conditions. Like demand conditions in India are not bad, and we have the reality of a recovery process on the domestic economy side, which is going to happen this year. So I think we need to be domestic focused. So I think domestic consumption stories which don't have too much global linkages, construction, infrastructure, defense companies. So I think the pockets or even telecom. So the pockets where people will need to invest become narrower. A lot of the export-oriented sectors will have risks. So although pharma has been spared, and to that extent, the growth prospects actually should be good for them. But then you never know when the tariffs there will be announced. So although my thinking process would be that given the kind of reaction which is happening to the tariffs already announced, I don't think pharma tariffs will come anytime soon. But it's a highly unpredictable scenario.
Interesting. So Sandeep, let's draw up a list. I know right now, or today at least, is not going to be the time to buy. But within the domestic focus consumption plays, what would you look to buy? You did briefly touch upon Kalyan Jewellers, but even for a Trend, for Jubilant Foodworks, the quarterly updates are quite impressive.
Yeah, so I'm not buying Kalyan Jewellers. I just quoted it as
absolutely.
as a sign of robust domestic growth. So I think large Indian financials are largely insulated from what's happening globally, although whatever, if they are aggressively exposed to exporters on the SME side largely, so there they could have some issues, but I think it will be low in terms of their overall exposure. So I think that's one segment which should do well. I think as a sector, many of these sectors which have been under actual pressure because over the last few years could be contra bets like paints, etc., given the way crude and other derivative prices are falling. On the domestic consumption FMCG side, many of the stocks are battered, but I think there we could actually see that pocket becoming a pocket where investors actually try to hide pure domestic plays like construction companies or even cement, etc., which actually don't have any exports and actually benefit if input prices correct. That's where we should be focused, and where we should try to avoid are more the global commodities where prices have fallen drastically and recovery could take time.
Sandeep, stay with us. Lots more to talk about, but I also want to, throw light on what's happening with the commodity construct, because, like we were chatting with Kunal earlier, no asset class has been spared, not even commodities after this Trump tariff tsunami. Precious metals like gold and silver are off from their recent highs, and Brent as well has been ailing. It's sub the $60 per barrel mark. Bitcoin as well, it's slumped to a 3-week low. In fact, I'm going to take it over to Ashesha to highlight how some of these other asset classes also, Ashesha, are not being spared at all.
Absolutely. It's not just equities which is bearing the brunt of global tariff war that we are facing, but it's across the board for commodities as well. First up, let's talk about precious metals, because spot gold is now near that $3,000 per ounce mark. It is down nearly 1.5% today. Last week it was down 1.5%, and from the recent highs of $3,167 per ounce in the global market, spot gold is now down over 5%. It's not just gold, silver too is bearing the brunt. Spot silver is now trading near $29.5 per ounce mark, and from the recent high of $34.5 which it hit in the last week of March, it is now down a whopping 15%. Industrial demand is likely to be impacted for silver, and that is the reason silver is underperforming gold within the precious metal market. As far as Brent crude is concerned, Brent crude fell below that $63 per barrel mark. It is currently trading near $63.9 per barrel. Today it is down 2.5%. Last week it was down 11%, and from the recent high of $75 per barrel mark, Brent crude is down over 17%. So across the board, we are seeing the impact of Brent crude, of tariff war on Brent crude as well as on gold. As far as crypto market is concerned, Bitcoin, it is currently at $79. On a month-to-date basis, it is down 7.5%. But remember, despite the recent fall that we have seen in the cryptocurrency market, Brent crude is up, Bitcoin is up nearly 18% from the November 5 lows. That's when Trump was elected. And since then, we have seen a strong rally come in for the cryptocurrency market, and Brent crude is up nearly 18% since then. But yes, it's not just equity markets which is facing the brunt. Across the board, for precious metals, for industrial metals, and for Brent crude, we are seeing that big fall come in today's trading session.
All right, thank you so much, Ashesha, for getting us all those details. But Sandeep, give us your take on the OMC pack as well, because with this volatility in the crude oil prices, we keep seeing those brokerage reports coming in and saying that the OMCs are in the sweet spot. But now that Brent crude hitting and coming closer to that $60 per barrel mark, do you believe that maybe sometime from now, it will be time to actually look out for OMCs?
Yeah, so OMCs directly benefit significantly because the government has not showed any inclination of reducing fuel prices irrespective of how much the crude prices fall. So the entire fall benefit goes to the profitability for OMC. So I think OMC is another segment where investors will try to hide in this turmoil.
Okay. Still trying to adjust to the new normal and, of course, bracing ourselves for a tumultuous session ahead. But Sandip, always good to have you on the show. Thanks for your time. Let's just revisit what the gift.
If you like this video, then like, share and subscribe to ET Now.